afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg QUINT Live. I'm Navneet Saluja D'Souza.
And I'm Alex Matthew. Well, this is the show that gets you answers to all your equity-related queries. But before we do that, we're actually going to turn to a management interview that we have lined up for you. In fact, we're talking about Tata Steel. In fact, they've had a steady fourth quarter that's been aided by a one-time gain. Let's get more details, Navneet, on this about the quarter gone by with TV Narendran, the MD and CEO of Tata Steel, who is also joining in. Also joining in on the show is Nikki Mirchandani from the research team, who's going to take the conversation forward. Nikki, I'm going to toss it to you.
Thank you, Alex. Hello and welcome to Bloomberg QUINT, sir. A good set of numbers reported by the company. However, we've seen an exceptional gain of around 11,376 crore this time around on exceptional basis. On consolidated basis for this company, much of it is due to restructuring of UK pension scheme. I'd like to understand if these gains are one-time in nature.
Yeah, it is a one-time adjustment. Basically, what has happened with our pension in the UK is that we have shifted over from what was the original scheme to a new scheme, and the pensioners were given an option to either come to the new scheme or to go to the Public Provident Fund, the PPF. So 30% of the pensioners have chosen to go there. About 70% has decided to come with us to the new pension scheme, which has a slightly different structure, and where the liabilities are a bit more limited in some sense of the term. So that allows us to recognize a surplus which is there. Most of the surplus is being recognized, which is a one-off. In some senses, it's a non-cash adjustment. It also has to be seen in the context of what we've done over the last few years, including last year, something like £550 million was paid into the fund. So if you look at it over a period of time, over the last few years, we've taken many hits. This time it's a positive adjustment.
I'm going to talk a little bit about your European division, where you've registered an 88% uptick in terms of your EBITDA per ton at around $71 per ton. This seems to be a little lower than what the analysts were estimating, and also as compared to your peer in that region, ArcelorMittal.
So two parts to it. The first part is it's been better than the previous quarter because operationally we were better than Q3. Q3 was a bad quarter for various operational reasons. The second part of it is that in Europe, many of the long-term contracts are negotiated from January. So if you look at the automotive industry and some of the other industries, the negotiations of new contracts happened in January, and that gave us an uplift in terms of prices. So these are the two reasons why you saw a fairly material improvement in the margins in the Jan-March quarter compared to the previous quarter. But yes, it's a fact that we could have done better. We've not done as well as some of our peers because operationally we still had some problems, particularly in the UK and in Netherlands as well. There were some issues and we had to sell more slabs than we would have normally done. So which pulled down the margins when you compare it to some of our peers. But it's for the reasons that I described, better than the Q3 performance.
Also, though we have seen a growth coming in your volume division in Europe for European division, I'd like to understand why are we seeing a decline on year-on-year basis, and also if we can look at a further contraction in the volumes for your European division.
See, Europe is a mature economy, and so the focus is not so much on increasing volumes as improving the mix. So the whole focus in our European operation is to say that how can we get a better mix of the existing capacities. So in the past, we've had higher volumes and we've disposed some assets. So the current volume level of about 3 million in UK and 7 million in Netherlands is kind of par for the course. So we expect to stay at that level and do all that we can to keep improving the mix, which will help us improve the margins. So volume growth is not going to be significant. It's going to be fairly stable at this level, and we're looking at how to enrich the mix within these volumes.
All right, reports suggest that steel producers, including you, have hiked the prices of HRC to in the range of around 750 to 1,000 per ton in the month of May. I'd like to understand if there are more price hikes in the offing, and also what kind of bearing or impact, positive impact it will have on the realization of the company in the upcoming quarter.
I think what happens in India will typically reflect what happens globally. The steel prices have been hovering in the $600 range for hot rolled coil over the last few months. It went up to that level during the October-December quarter, and January, February, March, it kind of reached that level. So to me, The prices in India are reflecting a little bit of what happened in the international markets, plus the fact that the economic activity in India has really perked up over the last few months. Some of the steel consuming sectors like automotive are doing quite well. Infrastructure is also starting to look up, so the steel demand is growing there as well. So we see the demand side situation is improving. We see globally prices at a more stable level. There are cost pressures which are particularly felt last quarter because the coking coal prices really shot up. That accounts for about 40% of the cost for any steel maker who uses coking coal. So to me, there were cost pressures, demand situation was more benign, and the world trade was a bit more balanced. Going forward, I see prices hovering around these levels, being range bound at these levels rather than significantly moving up or down.
Sure. The exit rate of the realization stood at around 49,000 per ton in terms of your realization for Q4 FY18. What kind of realizations can we expect through the course of FY19?
So what we said in the analyst call yesterday was that we expect this quarter to be about 2,000 rupees higher than the realizations of last quarter. Going forward, obviously there will be some seasonality impact in the July-September quarter, because that's when a lot of construction activity slows down because of the monsoons. But after that, things should pick up. So I think for the whole year, the steel prices will be range bound around the $600 level. Maybe $570 to $620 is the range that I would predict for hot rolled coil. The prices in India is also a function of the rupee. We should realize that 5 years back also the steel hot rolled coil prices were around $600, but at that time the rupee was 45 to a dollar. Today it is 67, and people are predicting even 70. So one needs to look at the rupee price in that context, because the dollar price may remain quite stable, but the rupee price will also be a function of the exchange rate, because for anyone who's using coking coal, all the coking coal is coming in, most of it is coming in from overseas, and the rupee, the exchange rate also impacts the cost for steel makers because of our dependence on imported coking coal.
While the sales volume growth registered 11% growth at 12.1 million ton for FY18, what is the kind of growth that we can look at for FY19 in that case?
The sales volume for the existing facilities largely depends on what we produce, because we are almost running full out at both Jamshedpur and Kalinganagar. So we have forecasted volume for the year in the 12.5 to 12.8 million range. Beyond that, obviously, we are limited by what we can produce. We are waiting to see what happens on Bhushan Steel. If that comes through, that's another 4 million tons which is added to what we can sell.
All right, the net debt of the company has come down to 66,900 crore in FY18. I'd like to understand the quantum in FY17, and also what kind of further deleveraging can we expect for the ongoing financial year?
1st April last year or end of last financial year, I'm talking of FY17, we were probably at around 75,000 crores of net debt. So we've come down to about 69,000 crores. So the net debt has come down. We have also refinanced a lot of our debts. So we are comfortable from a tenure point of view. 2-3 things, important events are ahead of us. One is the Bhushan Steel acquisition. Obviously, that will increase the net debt because we will use up a lot of the cash that we currently have with us. Plus, we will have to borrow another 16,000-17,000 crores from the banks, but that will lie on the Bhushan Steel balance sheet. But on a consolidated basis, it will reflect on us. But the other event is the JV with Thyssen, because 2.5 billion euros, about 20,000 crores of debt is supposed to move from the Tata Steel balance sheet to the JV balance sheet once we complete the transaction. So there are pluses and minuses. In the long term, we are obviously looking at keeping the net debt to EBITDA ratio at below 3. We are pretty close to that currently, but over the next year, things will go up, and then it will further reduce once the JV happens. And we are a capital intensive industry where the spending, particularly when it comes to inorganic growth, happens in big amounts in a short period of time. So there will be periods when it looks a bit stretched, but over a period of time, the objective is to bring it to below 3.
All right, with the NCLT not coming in for Bhushan Steel, I'd like to understand what kind of EBITDA per ton or the margin that you are expecting from this insolvent asset.
So we will always benchmark Bhushan Steel EBITDA levels to the EBITDA levels of any other player who is buying raw materials from the market and obviously try to replicate that. So the minimum we are looking for is at least 10,000 rupees per ton of EBITDA. And I've seen that some of our peers have done better than that in the last quarter. So let's wait and see how we can also realize something similar.
All right, although we have seen some kind of hike coming in on the steel prices, but I'd like to understand how is the trend going forward on the cost pressures, especially the coking coal prices, which currently trade at around $181 per ton. Your guidance on those levels for FY19?
So the coking coal prices have continued to be very volatile because the market is not very liquid, and so it's very vulnerable to one-off events. So on the demand side, events keep making the prices volatile, and more importantly, supply side events as well, because more extreme weather patterns, particularly in Australia, really impact these prices. So, and very often in the November-December period, there's always a freak weather event in Australia. So this year also the coking coal prices started spiking up in anticipation of that. Many of us stocked up for that, but the weather was fairly calm, and so coking coal prices over the last 2 months have started dropping. But it can go up any time. It's dropped about $20–25 in the last month or so. Obviously, from a Tata Steel point of view, we will see higher coking coal costs in this quarter than we saw in the last quarter, because we are going to be using some of the more expensive coking coal that we bought in November, December, January. The next quarter, we will see coking coal costs come down, because the prices at which we're buying coking coal today is lower than what we bought 3 months back. So there's normally a lag of 3 months, because that typically we have 70 to 90 days of coking coal stocks, because most of the coking coal comes from Australia and we need to plan for that. So there's normally a 3-month price lag between the cost lag between the price of coking coal and the cost impact on Tata Steel in India.
All right, sir, thank you so much for your time. It was indeed a pleasure talking to you. 3 takeaways from this interview that I would suggest. Well, cost pressures are expected to escalate going forward in the upcoming quarter. We see the EBITDA per ton for Bhushan Steel at rupees 10,000, and European business operation is expected to improve. Back to you guys.
Thanks, Nikki, for that very interesting conversation with the management of Tata Steel. Remember, on the operating front, the numbers were good for the domestic business, but the stock is seeing some bit of profit booking in today's session. Staying on with the earnings season then, Z Media is trading with some bit of cuts in today's trading day after reporting weak set of numbers for the March quarter. In fact, with a 44% dip seen for the bottom line of the company. Let's find out what were the key factors that weighed on the quarter 4 earnings. Joining us on the show is the Chief Financial Officer, Sumit Kapoor. Hi Sumit, thanks a lot for joining us today on Bloomberg QUINT. Good afternoon to you. If you could tell us what were the factors that dragged the margins that substantially for the quarter. I can see a jump on the top line, but clearly operating performance was impacted. And if I look at the particulars of your P&L details, the other expenses were substantially high if I compare it on year-on-year basis.
Yeah, so basically, if you look at our business, there are 2 ways I would look at my business. One is if I look at my TV business, wherein I have done exceptionally good in terms of a rise in my revenue. So we have practically grown at a rate of about 30% for the year in terms of my ad revenue, which is far higher than the industry average, especially in the news genre. So the industry has kind of clocked about 8 to 10% of growth in the overall revenue stream. We have touched almost about 30% growth, which is backed up by all my national channels and a significant contribution from my regional channels as well. Plus, what has happened is during the year, we have launched 3 new channels, one of which have already achieved a break-even, whereas the other 2 came in towards the second half of the year, or I would say one of them came in January end. So that's yet to pick up steam in terms of its operating parameters and is likely to contribute to the overall structure in the current financial year. If I look at my bottom line, there are 2 ways I like to look at especially at my operating margins level. If I look at just my TV consolidated numbers, I have actually grown my EBITDA by almost over 30% in fact. So my overall channel bandwidth has really contributed in terms of a favorable growth, and not only a favorable, but I would say a very strong growth when I say over 30% in growth terms in my EBITDA. What has happened is that during the current year, there was a business that we started in the middle of last year, which was a shopping business. It's a kind of a TV shopping come e-commerce model, which is now picking up in terms of its GMV, which is the gross merchandise value, and is likely to see a 3-digit number in terms of its gross merchandise value in this financial year. So said so, it initially required some level of setup in terms of a new channel, in terms of setting up of a team, in terms of its launch marketing expenses, which influence the overall, I would say, operational parameters. So if you look at
Sumit, if you could tell us what was the ad growth for the fourth quarter?
So ad growth, typically, if you look at it, has been in the bandwidth of almost about 25 to 30% over all the 4 quarters. It definitely spiked in third quarter, wherein we touched almost about 35%, and broadly the quarters have seen 25 to 30% growth in terms of ad revenues all throughout.
Okay, what's the guidance, Sumit, that you can give our viewers for FY19, since you're mentioning the TV business did well, but still the numbers were dragged lower. We've seen margins coming down to almost 11%. If you could tell us what sort of margin growth that one can expect for FY19?
So if we look at FY19, we are working on it from 2 perspectives, because this is a year wherein we are running for elections in various states, as well as gearing ourselves up for the national level elections, the central government elections, which is scheduled for early next financial year. What we feel is that while the national elections are going to benefit the entire spectrum of news genre, as far as the state elections are concerned, while it definitely benefits the regional channels, there may also be a period of, say, about a month or 2 when, because of the code of conduct which is levied during the election times, there will be a relative slowdown in terms of the kind of revenue that you can make in a normal time. So what we are looking at is that we should be targeting towards maintaining our revenues during such periods, the revenue rates. And simultaneously, we have now started working on scaling up our channels, the new channels that we have been launched, to contribute to the revenue and further improve our margins the way we have kind of tried to improve in the current financial year. It may not necessarily be a 30% growth, because the base has gone up. Now the base has strengthened. It has gone up for various channels. So it's not only 3-4 channels, which is Z News, 24 Ghanta, 24 Stars, but other channels, regional channels, which have been contributing.
Sure.
National channel, Z Hindustan has become very strong platform. Z Business is picking up pretty well.
Right.
So overall, if you look at it, I think we should be targeting towards a 20% kind of a growth minimum in this financial year.
Okay, 25% growth is the guidance which Sumit is giving for FY19. Sumit, we leave it at that note. Appreciate you joining us today and wish you all the best for FY19.
All right, on that note, let's get in our 2 experts of the day, Ashish Kelkar of Kiran Jadhav and Associates, and RITESH ASHAR of KIFS TRADECAPITAL are here to answer all of your questions. Thanks so much for joining us and welcome to the show. I'm going to jump straight to the first question, and this one is on YouTube. I'm going to pick one at random because a lot of you have written in to us already. Shivam Agarwal is asking about Brigade Enterprises. Shivam says that he's already picked up 50 shares. He hasn't said at what price, but he's asking whether it is a good idea to buy more given the current evaluations. What would you recommend? Ritesh, do you want to weigh in on this, Brigade Enterprises?
See, basically looking at the fundamental of this company, if you see the result also, it is not as per the market expectations. But if it is the current market price, if we'll consider, it is better to hold the position for a short span of time.
Okay, that's the view coming in on Brigade Enterprises. The counter is down almost 5% in trade. Let me take Nikhil's query. He's saying he's got Tata Steel at 622 for, he needs a 1 week view basically, so it's a short-term trade that Nikhil is taking, and also view on TV18 at 64 for 3 months. Ashish, if I could come to you for this one. First on Tata Steel at 622, can we just pull up the current price of Tata Steel and see where exactly that's trading? I know there's some profit booking that has come in after the numbers. So he's bought at 622, 608. Can he hold on for 1 week? If yes, what should be the target?
Good afternoon. If we look at the chart, the Tata Steel chart is in a consolidation zone, and if I look for the strong support zone, which is coming at around 600 mark. So till the time the stock is above 600 mark, I think that you should hold on to the stock. Whenever the price comes down to around 600, there is a bounce back which has been seen on the chart. So I would recommend to hold on with a strict stop loss of 598. Now on the higher side, if the stock crosses 612 mark, then in that case, the first target would be 625. So as of now, I would recommend hold with a strict stop loss of 598 on technical.
Okay, hold on to Tata Steel. The other query was in TV18, bought at 64 with a 3-month perspective. Ashish, I'm coming back to you. What's the view on the charts for this one? It's currently at 57.
Okay, TV18, it is in a continuously correction mode. From the level of around 70, it has come down to around 55, and today it has around 57 odd level. I am expecting the stock to go, there will be a pullback rally, and that pullback rally can take the price up to around 59 max. So I would recommend to hold on with a strict stop loss of 55.5.
All right, that's the view on TV18. Let's move on. Ashish Barua has written in to us on Facebook. He's bought 10 stocks of Maruti Suzuki at around 9,000. He's asking for the long-term view. It seems like he bought on the way down, in fact, because Maruti is currently trading around 8,730. It's up close to about 0.5% in trade today. He's asking for a long-term view, Ritesh. Obviously, market leader in the passenger vehicle space. Everybody's talking about auto positively, but what would you recommend?
So definitely it is a market leader, and the current price, it has been already corrected from 9,300 to 8,700 odd. So I personally feel if you have a long-term horizon for almost say around 12 months or 6 months, definitely you can hold this position. But in the same counter, if you are looking for some other alternative option, the Tata Motor looks to be very lucrative at this point in time. So looking at around Tata Motor comes to around 300 on 310, then definitely you can switch from Maruti to Tata Motor also for the better reason on the short span of time. For a long-term horizon, definitely the Maruti is a good stock to hold with.
Okay, Tata Motors seems to have bounced back. Remember, there was some weakness seen this week for this counter. The next query comes in on Delta Corp. Dheeraj Agarwal writes to us. He's got 800 shares at 272. He's got a long-term view of almost 2 to 3 years. He wants to know if he should hold or add more. 249 bought at 272, Ritesh. And this is one company I've been actually looking at the numbers very closely in the last 2 quarters. They've also started reflecting the online gaming revenues, and they've already broken even there. Numbers have been pretty good, but in the last few, I think last 1 or 2 months, there is some correction which has come in for Delta Corp. If somebody wants to hold it for the next 2 to 3 years, what would you advise them?
Let me tell you on that part, it is not a correction. It is all about the profit booking, because the counter has the way it has rallied a lot. And basically, in the strategy of this counter, or rather this stock has been changed. Earlier, it was a hardcore casino-based revenue focus, but now they are moving towards the new strategy of the digitalization, playing the game and increasing their revenue into that KT as well. No doubt, as of now, it is hardly coming 15% KT from the digitalization of the gaming business. But looking at the long-term perspective, this contribution will reach to around 25 to 27%. So looking at the business and the passion for the casino, I personally feel we should hold this stock for a long term.
All right, let's slip in one last question that we can get on Facebook. Rangarajan Balakrishnan is written in on Facebook. He's asking about Marksans Pharma, and he's asking if the current market price is a good time to enter the stock. It's seen a bit of correction so far this year. It's up in trade today about 5.5%, but it's not too far away from its 52-week low of 25.25. Ashish, what's the view on this counter? Is this a good time to enter?
For a trading perspective, I would say yes, it is a good time to enter, though it has gone up by 5.5% today. The chart are suggesting that this pullback rally, this is a pullback rally, this is not a trend reversal. So this rally can take the prices up to 32, 32.5. So from 29 level, it can go up to 32 to 32.5. But this is not a long-term view. Long-term view is still bearish, because there is no trend reversal pattern formation on the chart. So as of now, for a trading perspective, yes, it can be bought. If someone buy this stock at the current level, then for that particular trade, the stop loss should be 28.1 and the target would be 32. And for long-term, I would not recommend to buy as of now.
Okay, Marksans Pharma doing pretty well actually in today's trade, up almost 6%, 29 is the price, but let's not forget this too has corrected a lot, I guess, in the last 1 year. Thanks a lot for writing in your queries to us, and apologies we could not accommodate all the queries, but we'll try and address most of your queries in our show tomorrow. Thank you very much for writing in. I would also like to thank both our guests. Thank you Ashish and Ritesh for helping our viewers with their queries. Well, that's all that we have on this edition of Ask BQ.
Like you said, Navneet, we'll try and take as many queries as possible, so do log on tomorrow. We'll be back at 12:30. Up next on Bloomberg Quint, though, is Power Lunch. Don't go anywhere.